Welcome back to Investing 4.0, Visionary Investing in Future Trends. Today with, I'd say, rather spontaneous video. I actually wanted to post it yesterday, but I was looking at the house to possibly buy. By the way, I really liked it, so we'll see if we get it. But yeah, I didn't find the time, so I'm posting it today. And today we're going to talk about the HFCAA. Sounds like a very complicated term, all of those abbreviations, but this time the abbreviation is very simple and it stands for Hold Foreign Companies Accountable Act that was just passed by the House in the US, and that basically gives them the chance to delist foreign companies and specifically Chinese companies from the stock market if they don't comply with those rules and regulations. But before we start, one quick disclaimer or one quick notice here. And the next video will be about Palantir. So the next video that I'll post on this weekend will be a company analysis about Palantir. And since we are already a little tiny community that is pretty active, so I like your comments that you post under the videos and the discussions. And I also received a few emails from a few of you guys, so I really appreciate this. So I wanted to give you guys the chance to vote which company I will analyze next. And also, I hope I can implement it for the Palantir video this weekend as well. I'll give you guys my research for download. So I'll basically compile a summary and make it available to you guys. I hope you appreciate it. And please let me know which company analysis you'd like to see next. And I have my little list here. It's probably more accurate in the questionnaire, but you can choose between NIO, CrowdStrike, Xiaomi, and Medallia. So let me know which company I should analyze next. But now let's focus on the HFCAA. All right, I mentioned that the HFCAA stands for Hold Foreign Companies Accountable Act, and basically the US House passed that yesterday, and that basically stands for that all foreign companies should stick to those accounting standards, regulations, and so on. And that applies to all companies that are listed on the US stock exchange, like the New York Stock Exchange, for example. And this was specifically discussed because Chinese companies sometimes are withholding information or not getting auditors the access that they need to make a proper assessment and to finalize their report about those companies. And that basically puts the investors of Chinese companies into some risk. So yes, it's a risk that's out there that if auditors can make proper assessments, that investors might draw the short straw of the bunch there. So it's a good rule, I think. It makes sense from my side. And basically the House passed the bill, and it's now being sent to President Trump's office. And once he signs it, it becomes a law or a regulation. And there was no surprise. I think a lot of people expected it, but I'm going to break it down for you actually what the consequences are. And I give you my opinion on the situation and about what I think will happen in the future and how basically safe those companies like Alibaba, Tencent, NIO, and so on actually are. So I created this very, very complicated graph that you see on the side now. And basically that means, the HFCAA is at the very top, obviously. And we now know that the House passed that bill. And there was a yay or nay, and they said yay. So the nay option is already gone. The nay option would have basically meant that there would have been a big release of the fear and the stress, and that the stocks, or let me say it with Andrew Jigg's terms, the stonks would have skyrocketed. That would have been a positive outcome. Obviously, we didn't get there. So right now this was passed. And once it's signed, it becomes active regulation. And that regulation, once it's actually signed, would allow the US government to delist foreign companies and therefore also Chinese companies to delist them once after 3 years if they don't comply with those regulations and stick to those rules. And that basically means if it's passed this year, in 3 years, so basically the companies that don't comply, that don't allow those auditors access to all the information and all the data, would get a warning for each year. And then in the third year, the US government can basically start the delisting process, and the company will be delisted or can be delisted from the US stock exchange. Now, where we are right now is the vote was for yay, and basically now the Chinese government is basically in action, and they have two different outcomes. Again, I said very complicated chart, two outcomes here, and that is, or two possibilities here, how they can react. And the first one is they comply and stick to those rules and therefore create full transparencies and also give access to all of the auditors. And the second thing, the second option is that they don't comply. And you see the little arrows, red and down and green and up. And that basically is what will happen with the stocks and the stock market in general there. So there is one possibility: if they don't comply, that will be a big no-no, and the companies, especially if they delisted, will fall, and it would be pretty bad for all investors. And just as a reminder, investors are not just Chinese investors. Obviously, they would invest in the Chinese stock markets like Shanghai or also Hong Kong, but for all foreign investors, obviously, including a lot of US households that are putting their money into stocks or 401ks or Roth IRAs or however it is called into the global stock market, and parts of their stocks would also be Chinese stocks, and they would lose money. Basically, that means the US government, when delisting companies, would also hurt the retirement funds of their own population. So that's maybe one reason why Chinese companies might not delist it. Now, for the comply side, we have also two different scenarios here, and I didn't add it to my beautiful chart or graph here, but they're pretty simple. So the first one is that the Chinese government would fully comply with all those rules and regulations, which I think might be a little bit hard. The second option is that there will be some kind of compromise. And the compromise might be that, for example, the companies will be set up in a way that the Chinese government can still have some kind of influence and separate the influence sector, let's say, or the data that are influenced by the ones that are actually important for the business, and allow access to the auditors. So there will be some kind of split, so that the auditors don't get the information or what the interest of the Chinese government might be. So that might be a fine compromise. We will see also what the US government will say once there are some compromises on the table. Now, I personally, and maybe to give myself a little bit of credibility here, is that I wrote my bachelor's thesis about the legitimization of the Chinese Communist Party in the 21st century. And everything that the Chinese Communist Party is focusing on right now is to basically create trust within their own population and to create trust within the global, the world market. And let me give you a few reasons why I think that the Chinese government will actually come up with some kind of compromise or even increased transparency here. The world right now is watching about, let's say, ethical problems in China. We see it in the western regions of China with the Uyghurs. I'm not really sure how to say it properly, but there is a minority that is being suppressed right now heavily. And we also see it with the protests for freedom in Hong Kong right now. And obviously the Chinese government doesn't like that the whole world is watching, and basically is fearing about their reputation in the world a little bit. The second reason is the global pandemic that we all face right now. And we saw immediate responses by China in trying to save their face, to put it in Chinese terms. Mianzi, a loss of mianzi means the loss of face, and that is basically losing trust, and that is a very bad thing in the Chinese culture. So they, once the pandemic broke out, immediately sent masks, medical equipment, and even medical personnel to other countries that had issues with the coronavirus and tried to help. And they also tried to restore the reputation throughout all those measures. So we see that they really care about how they are being perceived in the world and about their reputation in general. Now, the second thing is that they want to become world leaders in 5G and automation and other new technologies. And in order to get there, the companies, not only the government, but also the companies, need to be respected. Now, what happens when a company is delisted from the US, like, for example, New York Stock Exchange, is a big damage in reputation, and obviously also a big damage when it comes to the financial situation, because they would just lose a lot of money. And that is not good. If you look at like Tencent, which is a global player, a lot of online games, right? A lot of technology. Also Alibaba is a worldwide player, and other companies as well. We're looking into contracts, for example, in Germany right now with the 5G standards, and Huawei is being discussed controversially. Now, if there is more suspicion going on that China is not transparent to global auditors and to accounting standards and so on, that will hurt their reputation more and will basically make it way harder for China to become the world champion in those new technologies. And I personally believe that China needs those big tech players to be successful in order to legitimize their own, let's say, politics and their own government. I'm getting a little bit sidetracked here. It's not about politics and it's not about how the population works out and how the social systems work. But I just want to mention and I just want to point out that it's right now it's the focus of the Chinese government to become the champion in those new technologies and also to be respected in the world and to become a new, let's say, world power with more impact and more influence and so on. So these are just a few reasons why I believe that in the end there will be no delisting, because either the US and the Chinese government find some kind of compromise, or because the Chinese government allows some, say, increased transparency to the auditors so they can actually get at least the minimum of the standards that need to be applied and they need to be held accountable for. So that is my assessment of this whole situation. I hope you are not disturbed by all the noise that is going on. I'm pretty calm right now. We'll see and wait. And let me know down in the comments below what you think about this whole scenario, what you think the outcome will be. In the end, nobody knows. I don't know. It's speculation. And it's just trying to make sense of things and make predictions. In the end, we will see. I'll definitely refer back to this video when I'm right. We'll see what I'll do when I'm not right. I'll probably be broke because I have a lot of money in Chinese stocks. I hope you like this video. If you like my simple explanation and how I broke down this topic for you guys, leave a like, please, and let me know that you enjoyed this. Otherwise, see you then this weekend with the new Palantir company stock analysis, and see you next time. I'm out.